All right. We have here Hawaii, Alaska. Now let's go up here to Maine. Maine, New Hampshire, Vermont, Massachusetts, Rhode Island. Rhode Island's that tiny little rectangle right there. You probably can't even see it in the video. Connecticut, New Jersey, Delaware, Maryland, New York, Pennsylvania, Michigan, Ohio, West Virginia, Virginia, North Carolina, South Carolina, Georgia, Florida, Alabama, Mississippi, Louisiana, Arkansas, Tennessee, Kentucky, Indiana, Illinois, Missouri, Iowa, Wisconsin, Minnesota, North Dakota, South Dakota, Nebraska, Kansas, Oklahoma, Texas, New Mexico, Arizona. Are y'all keeping up? Colorado, Utah, Wyoming, Montana, Idaho, Washington, Oregon, California. Did we say Nevada? Hi, I'm John, and welcome to my channel. Today is going to be part 3 of why America is the way America is. Now again, the United States, you have to remember, the United States is a union of nation states, okay? So every nation state within the union is different, right? We have Americans who go overseas, and while they're overseas in Europe and places, they see what's known as an added value tax, right? When Europeans come over here to the U.S., they don't understand why we don't have an added value tax. Some are kind of, wow, this heat, this humidity. I'm gonna go over the taxes, but I'm gonna make it quick, okay, and short, and just cut across the top. I'm not gonna go into depth over it. So let's take Portugal, for example, all right? The country of Portugal. Portugal is a nation state. Portugal is Portugal's. There's no other nation state within Portugal, okay? Portugal is not made up of multiple nation states. It's just Portugal. Portugal has an added value tax, right, that covers everything that they purchase. An added value tax is a tax that's added into the price before the sales price before they purchase it. So when they go into a store to purchase something, the price that they see is the price that they pay, because their added value tax is already added into their purchase price. Here in the United States, our federal government, the government that represents the United States as a whole, okay? The federal government that represents the United States Union, okay? It cannot impose an added value tax nationwide, all right? Unless all 50 states agree upon it and give the federal government the power to do so. The federal government cannot just impose an added value tax across all 50 states. The federal government doesn't have that power. The federal government here in the United States is limited in its power by two things: the Constitution and we the people, okay? Our government is a government of the people, for the people, by the people, all right? We are a constitutional republic, all right? We vote for, we hire people to represent us, okay? Whether it be in our state government or our federal government, right? And we have representation for taxation. There's only one place in the United States that doesn't have representation for taxation, and that's in Washington, D.C. Right? Washington, D.C. is our capital city, all right, our federal capital city. It's called the Washington District of Columbia, all right? We'll get into the federal capital and why it is the way it is in another video, but for now let's stick with the taxes. So we have 50 individual nation states, right? We don't have an added value tax nationwide, okay? And when we say nationwide, we mean all 50 states. We're not just talking about our individual nation states. When you come to the United States, though, however, you'll notice that each state has its own either income tax or sales tax of some kind, right? Not all states have an income tax. Right? Let's just make that clear, okay? But almost all states have a sales tax, right? And you can think of the sales tax as a added value tax, but only within each sovereign nation state, right? For example, okay, let's use Texas, okay? Since everybody knows Texas, right? Let's use Texas. Texas doesn't have an income tax. Right? They don't have a state income tax. They don't have sales tax on groceries. But they have tax. They have a sales tax on clothing. They have a sales tax on furniture. They have a sales tax on vehicles, right? I mean, they have a sales tax. They just don't have a sales tax on groceries. They don't have a state income tax, right? If you go to Ohio, the state of Ohio has an income tax. You pay the state of Ohio out of your income. The state of Ohio has a sales tax on clothing, furniture, and groceries. All right? So you can think of Ohio's sales tax as an added value tax, right? Texas's sales tax, an added value tax, right? Their tax, now Ohio's tax is different than Texas's tax, okay? For different reasons, right? Every state within the union has its reasons for its taxes and the reasons for the amount of tax it charges, right? Ohio gets a lot of snow in the wintertime, and they have to clear their roads and salt their roads and things to that effect. So their state income tax, right, they got a state income tax, and it might, and their state income tax might be higher than, say, the income tax of Arizona, because Arizona doesn't have snow in the wintertime, at least not like Ohio, right? So they don't have to charge as much as for their income tax. But then again, Arizona might have a state income tax, but no sales tax. Okay, Texas has a higher property tax than Ohio. Okay, in the state of Texas, your property tax could be $24,000, $25,000, $26,000 a year, or $13,000, $14,000 a year. Right? In Ohio, your property tax might only be $1,000 or $2,000 a year. Instead of Ohio, because Ohio has an income tax and tax on groceries, right? Texas doesn't have a state income tax or tax on groceries, so they have a higher property tax. They make up the difference in their state income through their taxes, but they tax differently, right, for different reasons. Some states tax alcohol with a higher tax than other states because they're anti-alcohol states, or they're tobacco states. Some states tax tobacco higher than other states because they're anti-tobacco. It just depends on what state you're in, on what the taxes are going to be. Now, granted, the state sales tax it's not part of the sales price in the store here in the United States when you go to purchase something, unlike the added value tax in Europe, where the tax is added into the price already, so the price you see is the price you pay. Here in the United States, that's not the way it works, because you have a state tax, you have a state sales tax, then you have your county sales tax, and then you have your city sales tax, right? Now, again, every county and city is going to be different, right? What one city charges for its sales tax may not be the same as what another city charges for its sales tax. Okay? Here where I live, we raised our city taxes so that we could pay for a new school, right? To have a new school built. Okay? So the city next door to us, okay, they didn't raise their taxes when we raised ours because they didn't need a new school, right? The taxes change, okay? Once we get finished paying off that loan for that new school, our sales tax will drop again. It'll drop because we're no longer making the payment on that loan for that new school, okay? So when you go into the store, here where I live, it's like 9.75% tax. Let's just say 10%, okay? Where I live. You go in the store, you buy a gallon of milk for $1, you pay $1.10 for it, right? When you look at the price of the milk on the shelf, it says $1. when you go to the cash register, you end up paying $1.10. That's because our city tax is 10%. Okay, but we also have our state tax. Okay, that we pay on groceries. So it's gonna actually, because our tax here is 9.75, I believe, and then we have the state tax, sales tax, and I forgot how much state sales tax is. But yeah, so the taxes change, and they go by percentage. Unlike the added value tax, I'm not exactly how the added value tax in Europe works. I know that I think it's like a flat rate. Like if it's a $5 tax, it's $5 tax on everything. So if it's like a $2 item, it ends up being a $7 item. You know, if it's a $5 tax, flat tax, you have a $2 item, it ends up being a $7 item when you, but it's marked $7, right? It's not marked as $2 because it's the added value tax. I'm just guessing there. I don't know what their added value tax is. I don't know how high it is, and I'm not sure if their added value tax is a tax that's added, because they say added value tax. So I don't know if the tax on each item is different based on the value of each item. Okay, and then they like say, let's say over in Portugal, a loaf of bread is $2. I don't know if the added value tax on that bread is based off of that bread being worth $2, or if, again, like I said, it's just a flat tax. Somebody, leave a somebody from Portugal or England or something. I don't know Portugal, because I don't know if Portugal's added value tax would be the same, set up the same way as Britain's. Okay, so just kind of leave a comment for me. Let me know, on how that works. I just know that here in the United States, for my fellow Americans who don't understand why we don't have an added value tax, that's why we don't have like a nationwide value tax, because our federal government doesn't have the power to be able to do that. All right? And not unless we give our government the power. And honestly, I don't want to be giving our federal government any more power than they already have. Once they get it, they don't want to give it back, right? But your state sales tax is sort of like an added value tax, right, for your nation state. If your state has a sales tax, right? All 50 states, again, we're a nation united, right? A united nation of 50 individual nation states, right? A union of 50 individual nation states, and they all have, again, they're all, individuals. We even have different cultures amongst our states. Right? Here in Oklahoma, our culture is different than that of Texas. We're smarter. Our culture is different than New York City. Right? Our culture is different than California's. Right? We're more laid back than Texas and California and California. We're here in Oklahoma. We like the slow life. Okay, we're the laid back type. But anyway, that is, again, added value tax. Why we don't have it. So, and that's why the United States is the way it is, right? So, now, let's talk about something like Puerto Rico. Okay, I talked about Puerto Rico in one of my videos, so I want to do a quick cover of like Puerto Rico. Right? Puerto Rico is a territory of the U.S. Puerto Rico became a territory of the U.S. after the American-Spanish War back in the 1800s, I believe it was. The American-Spanish War, I believe, is the war that gave us Puerto Rico. Right? We have territories in the Pacific. We have Guam and several other territories. The Philippines used to be a territory of the U.S., but we separated. They're not a territory anymore. But Puerto Rico is a territory of the U.S. Okay, and that's just leave it. So, just because Puerto Rico is a territory of the U.S. doesn't mean that they're not their own sovereign nation. Okay, they're still a sovereign nation. They're still a country. They're still a nation state of their own. They have their own flag, their own government, and their own, I believe, their own currency. All right, I could be wrong. They could be using the American dollar. All right, because they are a territory of the U.S., so they probably are using the American dollar. The Puerto Rico has representation in our federal government. Right? They don't get to vote in our elections, our presidential elections. They don't get to vote in our presidential elections because they're not citizens of the United States. They're again, they're a territory of the U.S., but they're not citizens of the United States, so they don't get to vote in our federal elections. But they do have representation in our government because, again, they are a territory. But again, sovereign nation, right, individual. Now, they could join the Union as a state, and there are politicians here in the United States who have tried to push Puerto Rico into becoming the 51st state in the Union. The people of Puerto Rico have said no on multiple occasions. The vote has been taken to the people of Puerto Rico, and they keep saying, no, we don't want to be a state within the Union. And I can't blame them, to be honest. They're an island nation. Could you imagine Puerto Rico becoming a state within the Union? They'd be just as bad, if not worse, than Hawaii when it comes to prices, right? Their property value would skyrocket, and if they created a state property tax, their property tax would go so high. The people of Puerto Rico would have to move to mainland U.S. because Puerto Rico would become pretty much a rich man's paradise, right? You'd have all the politicians and the people, the wealthy people from the movie stars on that moving to Puerto Rico, right? Buying up the land and everything, right? So I can't blame them for not wanting to become a state within the Union, right? They're self-governed. I mean, they get to be on their own because, again, they're just a territory. They're not a state within the Union. But so yeah, that's Puerto Rico there, and that's why the United States is Well, I hope you liked and enjoyed that video, and if you did, please hit the like, subscribe, and share and notification bell. It would help me out greatly. And remember, knowledge is a good thing. Truth in knowledge is an even better thing. And true knowledge, that's power.